Stocks slip after big drops in the dollar, crude, metals and US bond yields as investors root for safety. Equities too slip, but less sharply ahead of the US inflation print later today.
Sales of big chunks of shares by Blackstone in Sona BLW and M&M in Mahindra CIE draw good responses from foreign and domestic institutional investors, signaling a healthy appetite.
Market masters strike a cautious note in their conversations with CNBC-TV18. Most advise caution given the current market conditions, but see investment opportunities emerge on a further decline.
And U.S. President Joe Biden promises all depositors in Silicon Valley Bank and Signature Bank access to their money. He assures taxpayers won't have to pay for the backstop and warns those responsible for the bank's troubles with consequences.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, there is of course more reason for the bears to really take charge of the market, and the global contagion, the global nervousness is really trickling into our market as well. But we can still say that Nifty 50, even though it's closer to the low point of the day, but it is only a 200-point range in which it has seen the highs and lows of the trading session. In the last few minutes, the kind of recovery that it had seen, it gave up on that. Big boy Reliance Industries has a lot to do with that because it has now slipped into the red, though marginally. But at the moment, Nifty 50 with over 100 points cut and is at 17,050 odd levels, 315 points cut on sensex. Bank Nifty is in line with the key indices, down 0.6% in the trading session. 240 points cut there, and the mid caps, they are showing a slight outperformance to Nifty 50, but nothing to write home about. It's also down about 0.5%. So no surprises there that the advanced decline ratio, in fact, more than half the number of stocks are on the declining mode than the advances. So there is weakness persisting in the market, but still there are some shades of green, and PSU BPCL is the one which is one of the top gainers on Nifty 50 in terms of percentage. But Reliance Industries, as well as some of the other big boys like HDFC Twins, also have dealing a big blow to the overall market sentiment and keeping Nifty 50 now at a low point of the trading session. In fact, 17,037 level is the low point of the trading session right now. So looks like it's getting worse from lunchtime, Pavitra.
Worse, but it's been so volatile, right? I mean, we saw a huge recovery on the Nifty Bank just a few minutes ago, then a slip again. The PSU Bank Index, the Nifty PSU Bank Index was down 2.5% at one point. So that has recovered a fair bit, right? It's around 1.5% lower as we speak. What's encouraging is that the mid caps and small caps have recovered, because for a better part of the morning, it was once again the mid caps and small caps which are looking much worse than the frontline indices. So there's been a good recovery there. That is encouraging. But for the PSU Bank, it is still the top sectoral loser. Of course, SBI is the one which is looking really weak, but a lot of the smaller banks. So take a look at a Bank of India, Bank of Maharashtra. Just a few of the names, it's pretty much the entire pack, but these ones are up on your screen. From the IT pack, that is also a sector which is reeling under pressure because of what we've seen with the global setup. It is mid-cap IT which is taking the biggest brunt because of, some kind of exposure to the regional banks in the US. So take a look at what's happening with mid-cap IT. In terms of cues, it is really going to be the US CPI data, which we are watching very closely. So that's what's going on with the market action. But let's kickstart the show now by bringing you some important comments from market watchers. With the market reeling under the uncertainty over the financial system in the United States, Credit Suisse's Neelkant Mishra says that the severity of contagion triggered by the run on US bank SVB and its closure last week will depend on regulatory decisions, like if the depositors will be made whole immediately. But if SVB's troubles include an undiversified depositor base and no rate hedges, Neelkant believes that more accidents could well be on the way.
All right, so that's an important comment coming in, and fear more accidents. That's the key word and the biggest takeaway from Neelkant Mishra. But market veteran Shankar Sharma and Samir Arora also gave their opinions on whether the financial problems in the United States could have an impact on the Indian financial markets. Listen in to what they had to tell us.
maybe becomes a little bigger in the US, but the Indian banking system is very different. But I would not think that beyond a point, of course, it'll matter to Indian banking sector just because if one sector does badly, somewhere there is some pressure. But broadly, I don't think any of that will be felt here beyond just the stock market impact for a few days.
SVB is a case in point. I mean, we know that the whole VC landscape was all completely nonsensical. I mean, we've spoken about it, from the time the last crisis happened, the ultra low rates basically propelled money towards the riskiest part of the market, which is the VC market. And, that led to all kinds of unmerited businesses burgeoning and people either giving equity or debt also burgeoned alongside. And SVB obviously, was the beneficiary of that boom, and suddenly we found that it wasn't so. I don't think this is a structural problem that it affects, banking in general in the US.
All right, that is some important market opinion that we're tracking. But some more important data that came through is that we got the inflation number yesterday. So India's February CPI came in at 6.44%, which is above what the market was estimating, as well as, of course, above the RBI's comfort zone of 6%. What really was the main culprit this time was cereal and milk prices. However, the wholesale price index that came in this afternoon showed a welcome dip to 3.85% from 4.73 in January. However, the RBI has to tailor its monetary policy to keep, the CPI at 4% plus or minus 2%. So here's Lata with what the CPI numbers could hold for the RBI's next policy, which is in April.
Yes, it's above the RBI's comfort zone, but more importantly, above our forecast as well. The poll said 6.29%. And what is leading it is, again, something of mass consumption. Cereals up 17% versus 16% last month. And milk up 9.7%. It was 8.7% last month. So it's really a widespread and biting inflation. The core inflation, which RBI tracks, is also at 6.1%. RBI had said in the previous policy it wants to see it persistently lower. Now, there are some people who are arguing that the manner of calculation of food inflation is a problem. Be that as it may, the MPC has a given mandate of keeping inflation below 6%, and that it's come at 6.44 in Feb, 6.52 in Jan, means it has to come, at 5 in March for the average for the quarter to come down below 6, which is not happening. So they're going to miss their mandate again. Part of the street is therefore betting that an April rate hike is a given because this is becoming a structural inflation. But the other part argues that look at the global cues. We will get the Tuesday evening, our time, US CPI numbers, FOMC decision on 22nd March, and the manner in which the global markets have been disrupted by the banking instability will anyway bring growth lower, and therefore monetary policy should be forward-looking and there should not be a rate hike. So April policy becomes extremely interesting.
Oh, absolutely. The April policy is what we're all looking at now. Lata, thanks a lot for joining us with all of that data. In fact, on this, we also spoke to Soumya Kanti Ghosh, who's Group Chief Economic Advisor at the State Bank of India, to really understand his outlook on inflation and what he believes the RBI's next move should look like.
April might be a very interesting dilemma, or I think it might be a serious dilemma on the part of RBI because we have already been now observing because keeping aside the methodological issues regarding the CPI, I think the yesterday's number was on expected lines. In fact, we were expecting the same number around 6.4%, which was released yesterday. But I think the good thing is that the March and April inflation numbers will be significantly benign. March could be around 5.5 to 5.6%. April could be around 4.5 to 4.7% if the current trends hold.
Right. So views on inflation, and connected to that is also the central bank's action across the world. So Nomura's Sonal Verma says an RBI policy pause in April will be supported by impending disinflation, despite elevated headline inflation. Now, the factors supporting a pause in April policy include softer super core momentum below 5% inflation, and recession risk in the United States. Nomura also expects headline inflation to fall to near 5.5% in the month of March, with the core print easing to about 5.7% beyond March. Now, they expect both headline and core inflation to fall below 5%, with both likely to average 4.9% in FY24. And also, Sonal adds that a favorable base effect and continued moderation in inflation due to weaker growth support a pause in the April policy. So whether there'll be a pause, that's the view coming in, but that's the big question on everybody's mind, because the central bank pause is something which is likely to give respite but needs to be seen going forward. Let's now focus on some stock-specific action then, and sources are telling CNBC-TV18 that the Income Tax Department survey at CIPLA is focused on tax avoidance and violations, and that the department is investigating wrongful claims under multiple sections of the IT Act. In fact, our colleague Timsi Jaipuria is joining in with all the details on that development. Timsi, tell us.
Well, that's right. What sources have told CNBC-TV18 is that the Income Tax Department, which took survey operations at CIPLA on 31st January, have focused on violations and tax avoidance. However, we are given to understand that no tax demand has been raised so far by the IT department, but preliminary investigations are looking for wrongful claims and deductions. Here, under Section 80 IA, investigations allege that CIPLA has made wrongful claims of about 400 crores under this particular section. For the benefit of our viewers, Section 80 IA provides for deduction of 100% of profits and gains derived from specific businesses for 10 consecutive years in a block of 15 years, only up to a certain period. Not just this, IT department alleges 1,300 crore of wrongful deduction claimed for R&D. Section 35 of IT Act actually provides for deduction on expenditure incurred for scientific R&D, ranging from 100 or 150% on case-specific basis. Taxman also alleges tax avoidance on funds given as benefits to doctors and medical practitioners, amongst other violations. CIPLA, in its response to CNBC-TV18, shared that there is no claim or demand made on us. CIPLA, in an exchange notification on 6th Feb, had shared that the company has fully cooperated with the IT department in providing details and documents. CIPLA continues to do so on all items indicated by the IT department, end of quote. Let us see what is the final outcome of this investigation.
All right, MC, thanks so much for getting us all those important details on CIPLA. But sources are also telling us that Bandhan Group is looking to enter the insurance business. And Yash Jain, our colleague, is joining in with exclusive details on that. Yash, what are your sources telling you? Because there was a large transaction of group finance by Bandhan Bank a few years back when they entered into the home finance segment, and insurance could be the next one.
Well, that's correct. So, of course, on one hand, the insurance regulator time and again has been saying that they want more life and general insurance companies to come into the sector. They've been putting out reforms to sort of facilitate this particular entry from new companies into the sector. What we've been given to understand from our sources is that one of those new companies could come from the house of Bandhan Group. What sources tell us is that the Bandhan Group is looking to enter both general and life insurance market. The intention is to start with the general insurance space and look at life insurance market after that. As per our sources, recently the management at Bandhan Group met the insurance regulator IRDAI, where the intention of entering the insurance space was discussed between the regulator and the group. The thought here from the Bandhan Group, as per our sources, is to look at both things, organic as well as inorganic growth opportunities. They are indeed in talks with a lot of existing general insurance companies to explore acquisition opportunities. On the other hand, they are also waiting for the insurance reforms and the insurance amendments to pass through in the parliament session, because what that will do is it will reduce the capital commitment which is required from new players coming into the insurance segment. So that's another thing which they are watching out for. But importantly, Bandhan Group looking to enter the insurance market, adding one more vertical to its banking and mutual fund space at this point of time.
All right, Yash, thanks a lot for bringing us all of those details there. But moving on now, Adani stocks are under pressure today, with Ambuja Cements down 4%. A morning context report published on Monday, that is the 13th of March, reported that Ambuja Cements and ACC are owned not by the Adani Group, but by Vinod Adani-controlled entities. CNBC-TV18 has gone over the disclosure made in the open offer document for Ambuja Cements and verified the same as well. The disclosure reads, and I quote, "The ultimate beneficial ownership of the acquirer is held by Mr. Vinod Shantilal Adani and Mrs. Rajanben Vinod Adani," end of quote. The point of concern on this is that the Adani Group had indicated in its response to Hindenburg's allegations that Vinod Adani is not a related party. We now await a response from the Adani Group for greater clarity on this subject as well. But with that, we do need to get into a short break on the show. You stay with us, because on the other side, we're going to bring you the latest on the ongoing farmer protests in Nasik. Welcome back. An important story to track now. The Maharashtra farmers' protest continues as the All India Kisan Samiti has rejected Maharashtra Chief Minister Eknath Shinde's compensation offer of 300 rupees for a quintal of onion, while a delegation is also set to meet the government tomorrow. So my colleague Santya is in Nasik right now, and she joins us with a ground report on this. Santya?
So, Pavitra, right now we are on Mumbai-Nashik highway, and this is the group of farmers, and they started walking. So, the official march started yesterday. They started walking from Nashik city, but the farmers who are coming from outside of Nashik, they started their long march on Sunday itself, and talking about the basic needs and the primary demands of these farmers. Let me try and talk to some of the farmer leaders. अजीत सर, अगर आप हमें बता सकें कि आप लोगों की मुख्य मांगे, क्योंकि आप लोगों के मार्गदर्शन में सारे किसान इकट्ठा हुए हैं, पहली बात तो कितने किसान होंगे और आप लोगों की मांगे क्या-क्या होंगी?
महाराष्ट्र में प्याज के दाम गिरने के कारण किसानों में बहुत बड़ा गुस्सा है। सरकार से वो मदद मांग रहे हैं। 600 रुपए की डिमांड है, 300 रुपए लॉन्ग मार्च के चलते उन्होंने मान ली है, लेकिन उतनी काफी नहीं है। ट्राइबल जो पीपल है, आदिवासी किसान है, उनके जमीन के पट्टे उनके नाम पे होनी चाहिए, ये एक बहुत बड़ी डिमांड है। उसी के साथ दूध उत्पादक किसान है, देवस्थान या टेम्पल लैंड के जो किसान है, उनके सवाल है, तो इन सारे सवालों को लेके ये लॉन्ग मार्च आगे भी बढ़ रहा है।
So these are some of the primary demands of these farmers. There are at least 15,000 farmers who are walking. This part of the highway, this section of the highway is dedicated for this march. Police deployment is there. Ambulances are there in order to handle any untoward situation. And before this, actually in 2018 also, a similar march took place when farmers started walking from Nashik and they walked all the way to Mumbai. In 2019 also similar march took place and the demands were not met. So here are the farmers in 2023 walking all the way to Mumbai. Back to you.
All right, thanks, Anthea, for that ground report. With that, we'll slip into a short breather on Business Lunch, but news and updates continue on the other side. Don't go anywhere. You're watching Business Lunch, and we'll get you an interesting dive on women's participation in the workforce. Now, CNBC-TV18 and Federation of Indian Chambers of Commerce and Industry have conducted an interesting survey on women in workforce. And Archana, my colleague, is here with all the findings. Archana.
Thank you for that. For it to be India's century and not just India's decade, it's important to keep underlining the importance of women participation in workforce. So CNBC-TV18 and FICCI collaborated to put the spotlight on the ground reality. Now, 80 companies across 12 sectors with a turnaround of over 20 crores to 7 lakh crore rupees were surveyed in February. Now, 60% of respondents belong to the manufacturing sector, while the remaining 40% were from services. Now, let's take a look at the gender composition of this survey. It consists of 69% males and 31% females. Now, there are several factors which lead to women dropping out of labor forces. Now, this survey puts the spotlight on that as well. Now, look at the attrition pattern in these 80 companies. The highest attrition was seen in the age group of 20 to 30, which is 15%, followed by 30 to 40 age group, which is 13%. The lowest attrition was seen in the 50 to 60 age group, that is at 3%. Now, another important finding of this survey was a representation of women in leadership roles. Now, in these companies, 22% were board of directors, while 21% were C-suite executives. Now, what kind of roles were undertaken by women according to this survey? Human resources, 82%, finance, 59%, admin, 57%, marketing, 57%, sales, 51%, IT and digital, 49%, strategy, 35%. Meanwhile, the survey also highlights key policies and facilities for women to encourage more participation. Now, what kind of policies? Prevention of sexual harassment, 90% of these companies had them. Non-discriminatory recruitment, 90%. Infra, 78%. Extended maternity benefits, 73%. Flexible timings, 71%. Flexible location, 48%. Transportation, 43%. All right, let's also talk about another pertinent benchmark, which is upskilling and reskilling program for women for when they return after a long break. Now, apart from providing on-the-job training, many of these organizations provided refresher training to their female employees. But look at the numbers. 52% of these companies had such programs, while 48% didn't. Majority of participants highlighted absorbing their women employees in the same department and location after their maternity leaves. The study also makes some policy recommendations to the government, and this is the most important aspect of this survey. It has urged the government to institutionalize more scholarships to encourage women in STEM fields, that is science, technology, engineering, and mathematics. Now, they also want legislation on gender pay parity, gender mainstreaming in existing programs, and equal paternity leave, so to enable men to share childcare responsibilities with women. Thank you.
Archana, thanks a lot for getting us all of the highlights of this extremely important survey. And for all of our viewers, remember today you can catch India's largest summit on gender parity. Women leaders from all walks of life will come together to brainstorm and ensure that we take decisive steps to bridge gender inequality. The event starts at 4:30 p.m. this evening, and we will bring you the live coverage right here on CNBC-TV18.